Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, March 26th, 2009. Well, Wall Street is trading up on the day today. The NASDAQ really leading with the tech sector. You got an upgrade of research in motion today. Apple Computer very strong. Google up $11. Baidu up about $3. And Amazon up about $1.65 right now. So Wall Street is really being led by techs and transports. Transports are very, very strong. What's not strong today are financials. Goldman Sachs down about 285 on the day, and we're finally seeing a little break in the financial rally or financial market-led rally that's been going on for the last 2 weeks. All right, now we hit some key levels that we talked about yesterday in the video. We retested them today, and all of this is coming together to form a very interesting intraday analysis video. So I really want to discuss that. Right now, the Dow up about 75 points. The NASDAQ up about 34, and the S&P up about 7.5. Really, the Dow and the S&P up about 1%, the NASDAQ trading up over 2% on the day. Now, what you're seeing here are some key levels in my intraday chart. I'm going to draw a couple extra ones in as well, but these are the big ones. Yesterday, in yesterday's intraday video, I talked about this high that was hit was a gap fill going back to February 13th on the 60-minute chart. Very, very imperative. As soon as I saw that yesterday, guys, and in the video I said this market could go negative off of that gap fill, and look what happened. So an amazing call in yesterday's video. You got a nice little short covering rally and a little bit of spike into the close as the government defended the dollar after some ugly comments out of the European Union president, one of the European Union presidents saying the U.S. Is on a road to hell based on the stimulus, based on the bailouts that's going on, and the massive trillions that are flowing into the basic economy and trying to pump things up, buy up bad debt, and so forth. But nonetheless, they did come out and defend it around 3 o'clock, and you saw a massive rally back up. But nonetheless, this short was a great opportunity. You just have to know your charts, guys. Can't stress that enough. If you can read technical trendline analysis, if you know your price, pattern, and time, which is what we go over in the Research Center, in the nightly videos, and our nightly educational reports, and everything we put out in the Research Center at InTheMoneyStocks.com, you will be fine. Now, what we are seeing here, folks, is a little bit of a spike up in the market. This is very, very interesting because you're now headed back towards your resistance levels. And there's going to be a big, big resistance level right up here at approximately 8270-ish, give or take, if we get there. So that should be very heavy resistance. You can see right here, you tested it this morning, which is a double top from yesterday. And on the 60-minute, let me show you the 60-minute, going back to February 13th. All the way back here, this is that same level, and I showed this on yesterday's video as well, that you have to be watching. This is extremely, extremely important to watch this level, and really anywhere between this point, 8275-ish, 8270, upwards of right around this level will be heavy resistance in this market, kind of like a big thick door for the markets to push through. I highly doubt it will do it in the near term, although it's up in the air, and again, we give that to our premium subscribers in the nightly videos, what we think will happen over the longer term, over the next couple days. Intraday, I highly doubt it. Okay, now you're starting to see a little pullback. Geithner just finished his testimony, it looks like, and that may be a result of a little bit of a spike up here. He went to on Capitol Hill to ask for more regulatory abilities to regulate hedge funds, to regulate mutual, all the other forms, really, AIGs of the world, the financials in regards to insurance and so forth. And look at this pop here, guys. This is impressive pop. Notice this is resistance right here. You should have good resistance here. If you close above this, then you're going to start to look for another level a little bit above it. Goldman Sachs is starting to catch a bid, and we're going to see now, is this a squeeze or is this a double top fake out here for a pullback? This should be resistance. You can see you're starting to pull back off that big pop, and again, a little bit of increase in volume after Geithner came off TV now all of a sudden. Very, very interesting. You're watching this live with me as it happens. Now, what I want to show you is this, folks. We have this trend line which extends all the way through, and you can see this is a very important line. And look at this. As a scalp short play, this is actually working out beautifully. And you guys are seeing it live again as I do this video. So you can see the resistance level right here, guys. Oftentimes good for a scalp, but you have to be aware of what's going on in that situation. You have to understand that this trend line that extends, and let me show you where I got this trend line from. All the way back here, folks, you can see going back to the low of the 23rd, all the way underneath the market to the lows from the 24th, And look at how it coincides with this current market. It basically gives you this level right above the current market levels, and look at where this market's hitting resistance. You have one trend line curving up, the double top curving across. Both are meeting in this area. So you're really watching this very, very keenly to see whether or not we can break it or not. Generally, when there's two lines converging like this, it will have a hard time breaking. And again, you're seeing this market live pull back a little bit off that level. Now, the secondary thing I want to point out, folks, is what we did on the open. We did gap higher off of this monster move up into the close, and notice here, we gapped right onto a major resistance level. All right, here's where we closed. You gapped up. Here's your major resistance level right here on the charts. And what you see is you basically close on that line. The secondary candle closes below. As soon as you close below, you can start looking for downside momentum to gap fill. Absolutely happens. Market starts selling, selling, selling. And again, remember that when you gap up into a resistance level and you can't capture that and get above it on the first candle, watch for the second candle to give you a signal. If it starts to downtick or closes lower, this can often be a sell signal all the way down to gap fill. We fall all the way back down, fill the gap twice. Once here, bounce off of it, bounce up, then fill it twice, then bounce higher and start trending right along this trend line. Now watch this market because we're right on key resistance again, and we're trying to push. This buy program coming in the markets right now is a very powerful one. There's no doubt about it. This is a very, very important buy program. And again, does it fail and close below? Does it close above? We're going to know here in about 3 minutes when this 10-minute candle closes. Again, we're looking at the SPY on the intraday 10-minute. Now, we're going to go to the 60-minute in a second, but I want to show you something else. Take your lower line here and extend it underneath. See that line? Connecting it to the low here, to the low here, and right where we were on the 20 moving average. So notice how this trend line is right at the lows here, which coincides with the 20 moving average. You really didn't get a close below. You opened below here, but again, that instantaneous buy program came in and spiked things up. So you got to be watchful of that. You got to understand your levels, your moving averages, your patterns, and understand how this movement here, pulling back and then blast off right into this level. But notice the resistance level we've called here in this video. Look at how hard it is for this market to get through. Now, in all fairness, it is fighting this impressively. The fact that it hasn't pulled back more is a very, very impressive move here, but nonetheless, you are seeing this continue to consolidate, and again, with 2 minutes left in this candle, it's going to be very interesting to see where we close. Remember, this level was that gap fill going back to February 3rd. We hit it yesterday, and then we hit it again this morning, and now we officially hit it again on this pop, hitting 82.81, making a higher high. Now, the question will be, again, do we close above and then confirm that move, which means we could be going higher, or do we fail here and pull back and close below it? That'll be all intraday analysis going over tonight's video, and again, we'll project off of what we see in today's video for tomorrow, give our premium subscribers the best chance and the best probabilities of understanding being on the right side of the market tomorrow, folks. Alright, let's quickly go to the 60-minute chart, and again, look at this push, guys, very impressive. Still, we have about a minute left in this candle, and we'll see what happens. Now, there's your gap fill going back to February 13th right here. This is your area of resistance. So we're right at the bottom area of this resistance. We could actually trade upwards of this level, which would be 83.30 or so, 83.30 into that resistance line. Anywhere in there will be heavy, heavy resistance in my book. Going back to current market conditions, here's that triple top right up here, guys. You are breaking above it slightly, and you have to watch this level now. We're still pushing very, very impressively to the upside, and we'll continue to watch this very, very closely. Again, what you're going to watch for, you want to watch your 60-minute chart for trend lines. You got to draw these trend lines in, folks. There's no doubt about it. This is actually another trend line I want you to watch. Connect the high here from the 19th to the high on the 23rd. It connects to the high of the 25th, and we may go up and touch that. Approximate print would be around 83 and change. The low 83s, 83.25, looks to be good resistance on the 60-minute if you push up. And again, all I'm doing is connecting trend lines, noticing where they're going to connect into, and see that point, okay, folks? So that's something you definitely need to be watching for, and it looks like that may happen. All right, we're just about to close that candle. It looks like we'll close above that level here in a nice break of this resistance level that we had hit once and twice today, which was gap fill. Now we want to see if we confirm it in this next candle that's just beginning. Alright, folks, stay tuned and come join tonight so we can go over this play and see if it works out. We'll talk to you all this evening in the premium subscribers video. Take care.